going on, guys? Welcome back to another video here at Wall Street PR. In today's video, I'm going to be going over the electric vehicle company based out of China known as NIO. Ticker symbol is just NIO. As you guys can see, they're currently trading at $18.75, and they are going to be up 1.81% in after hours to $19.09 per share, following a 25.5% gain during regular trading hours today, 3/16 of 2022. To give a brief background and overview of NIO, they are, like I said, a Chinese-based electric vehicle company. They were extremely popular in 2021, where they ran up to their all-time high of $66.99 per share back on January 12th of 2021. They are very popular as well amongst retail investors, and they are seen as an eventual competitor to Tesla. And if we take a look over here as well on their official website, this is what their vehicles look like. This is their ET5. You can see it's a pretty nice design. I do think that the electric vehicle industry as a whole is an industry that will bring some really great returns these next few years as more and more people and automotive makers convert from the standard cars over to electric vehicles. It's something that can't be ignored, and it's a movement that will eventually happen sooner rather than later. But if I zoom out, you can see NIO was in a clear and steady downtrend ever since those highs of $67 per share. And it really had nothing to do with NIO in particular. The entire market as a whole, as I'm sure you guys have seen, was in a downtrend. All these high growth stocks like NIO and like these other ones were down pretty bad. There was also some inflation concerns. There's the Russian-Ukrainian war that is still ongoing, obviously had some effect on the entire market as a whole, and is part of the reason why NIO is in this clear and consistent downtrend. If I go ahead and actually draw this in right here, you can see if I have this trend line, you can see this is a pretty clear downtrend right there, guys. You can see a lower trend line right about there. I'll go ahead and draw in this upper one as well. They were in a pretty consistent downtrend all the way to about right here, and they still kind of could be in this downtrend. But personally, guys, if we zoom in and take a closer look, you can see ever since they hit the low of $13.01 per share, they did gap up now on some good news all the way up to the current price of $19.13 per share, just peaking above this upper trend line. I do expect them to break above it and hold, and I do think this is the start of the eventual reversal of NIO stock. They've been in a downtrend for way too long now. I do think this could be the start, like I said, of the turnaround for NIO stock. Next, if we take a look at some of the recent news and catalysts for NIO stock, you can see this came out today. It's titled "Chinese EV Stocks Are Getting a Giant Boost from the Government." And if we go over here and briefly cover this article as well, you can see NIO shares have been tracing a downtrend since it peaked at $67 per share on January 9th of 2021. The weakness reflected production disruption that was precipitated by supply constraints. NIO fell 35% in 2021, underperforming its domestic peers as well as most U.S. EV stocks. But given the multiple product launches planned for 2022, it was widely expected that NIO would recover from its predicament in the new year, but that was not to be. Fears of its new string of Fed rate hikes and later on the start of the Ukraine war sapped the risk appetite of the market, and NIO was also caught in the vortex of the market-wide sell-off. That's exactly what I said, guys. You can see NIO shares at the time were down 53% year to date. You can just see this chart. You can see the pullback clearly portrayed by this image. If you scroll down a little bit further, you can see China concerns ease. The reversal in sentiment towards NIO shares seen on Wednesday is in part attributable to across-the-board strength in Chinese stocks. Investors have been fleeing these stocks in droves on fears that they might face the prospect of delisting from the U.S. exchange. When people kind of have their bear thesis on NIO stock, or basically any Chinese stock, they always just use the typical excuse of, oh, it could be delisted from the U.S. markets. Obviously, that's a great concern to have, guys, but I really just don't see that happening with a company as big as NIO. I think the Chinese government is beginning to back NIO, and I do think NIO is always willing to comply with U.S. audit laws, and they haven't had any issue in the past, so I don't really know why they would have any issue in the future. If we scroll down here as well, you can see the SEC did release last week a list of 5 Chinese stocks trading on the U.S. exchanges that were found non-compliant with the Holding Foreign Companies Accountable Act, and that law requires that listed companies make available their audit statements to the U.S. Public Company Accounting Oversight Board. So obviously that kind of scared some investors out of all Chinese stocks, and I think it's kind of a guilty by association thing. If you're a Chinese-based stock, regardless if you have issues or not, you did kind of pull back on that news, as you guys can clearly see in this downwards channel. But today, guys, I think that was a great day, a great reversal. You can see now some investors are pouring back in following this nice green day, and this is titled, "Is NIO Priming for Pre-Earnings Run-Up?" You can see that the company does have their earnings report scheduled to be released after the market closes on March 24th. So that is in a few days, about 8 days from the time of this video today, March 16th. You can see analysts on average expect the company to report a loss of 21 cents per share to the fourth quarter, wider than a year ago loss of 16 cents per share, and revenues are likely to have increased 49% year over year to 1.53 billion. Obviously, that's fantastic news, guys. You can also see that NIO has already reported that it delivered 25,034 vehicles for the fourth quarter, and that was a change of 44.3% on a year-over-year basis. So all these numbers are fantastic. Revenue up almost 50% is something that people really shouldn't look away from. I know a lot of these people are scared because stocks have been falling. There's inflation concerns. There's the war, concerns with the war and things like that, but I do think now is the time to get in NIO. I have been saying it on my TikTok account that it is time to buy right here at $13. I hope some of you guys did if you are watching this video, but nonetheless, guys, I still do think they are undervalued despite a 30% move. I do think they will see a move similar to this. I think they're going to break above this channel and eventually shoot back up to about $30 per share. That's my short-term price target for NIO, is $30. I think that's a very safe, very conservative price target for NIO, especially if these earnings coming out on the 24th are pretty solid as well. I think that'll help them get there sooner, but nonetheless, I'd say this is a short to mid-term price target, is $30 per share. It's a level that they hit in the past, and I still do think, even at $30, that they are undervalued, and that their fair value price target is $35 to $40 per share. But with that said, guys, always be careful when you are investing. Only invest what you can afford to lose. And if you are new here, please do subscribe to my channel. Thank you guys so much for watching, and I'll see you all in the next one.